Welcome to Stony Finance Lab channel.
We're here today to present an opportunity. It's a chance to steer our community into a collaborative approach where we can all benefit together. It's a win-win opportunity. This opportunity is for local investors who want to diversify beyond stocks and bonds, but may not qualify to be an accredited investor. This is for those that think about what our investments say about us and how others will perceive us. This is for those that remember the Occupy Wall Street movement and what it represented. It's for those that want to help address inequalities.
We want to end the unfair treatment and conditions in the rideshare industry by putting the drivers in charge and in control of the company. For far too long, companies such as Uber and Lyft have taken too large of a share while giving drivers zero voice. It's long overdue that drivers receive more control and benefits considering they do all the work and take all the risk. The solution is a 100% driver-owned cooperative. This will lead to a larger share of the fees for the driver. As of right now, Uber and Lyft take about 25 to 40% per trip. Drivers will also have democratic control in the company. This will allow them to have a voice and involvement in the decisions that affect their jobs and livelihood. And lastly, profit sharing will enable lower acquisition costs. The Drivers Cooperative is a rideshare company owned by the drivers. They receive a larger share of the profits while having democratic control in the company. The founders of the co-op are Eric Foreman, Alyssa Orlando, and Martin Ken Lewis. The cooperative operates in New York City and began operations in May of 2021. The co-op will start by raising support within the community. Working with local politicians such as AOC will help foster that support. Then the co-op will compete with firms such as Uber and Lyft in order to gain a sizable market share. Lastly, they'll then take that knowledge and experience and use it for expansion into new cities across the country.
The global ride-sharing market is estimated to grow from $85 billion to $185 billion in 2026. The ride-sharing industry was the most affected by COVID and the most preferred before the pandemic. Also, the cost of vehicles and fuel prices have risen for drivers across the world. E-hailing is the leading sector in the ride-sharing industry. Peer-to-peer car sharing is expected to lead the ride-sharing industry. Also, companies are developing autonomous vehicles for the future. Some of the companies are Lyft, Ford, Uber, Honda, and Tesla. And the Asia Pacific region is projected to have the largest growth potential in 2021. The ride-sharing market has grown to 100 million users in the United States. The industry made about $5 billion last year and $14 billion in 2019. We expect a bounce back in profit in 2021. In the last graph, both Uber and Lyft's consumer spending increased in the summer months of 2020. In the first table, the graph displays about 70% of vehicles on New York City roadways are ride-hailing vehicles. The table also shows the mix of decline and slow growth for taxis from 2019 to 2021. The second table shows that the two largest companies in the ride-sharing industry have steadily increased after the pandemic shutdown and increased their spending. The last table shows the monthly trips per vehicle per company in New York City. Uber has taken the lead throughout 2021. Lyft has come in second. Via has steadily declined since 2020, but it has steadily increased a bit in 2021, and Juno has steadily declined since 2020. In the pie chart, the data displays that Uber holds about 60% of market share in New York City. Lyft is the nearest competitor with about 22% of market share. Some of the smaller competitors combine for about 18.3% of the market share. For Drivers Cooperative to profit, we only need to gain greater than 0.2% of the market share.
The Drivers Cooperative main competition in the ride-sharing industry is Uber and Lyft, who dominate the market. Drivers Coop's advantage is their focus on their workers, as their business plan can more than double driver income through profit sharing and low acquisition costs, as well as the help from a leadership team with vast experience in this sector. This plan can also help to restore some dignity to the public perception of the ride-sharing market. With their current market shares, Uber and Lyft can act to reshape the market and its regulations to maintain their competitive advantage. The biggest benefit of our product is the combination of the lower cost for rides to customers along with the greater profit for the drivers. As shown in the picture here, an Uber ride from LaGuardia to Douglas Ave costs $56.61, of which the driver makes $33.96. The same ride on the co-op would only cost the rider $47.36, while the driver of the car would make $40.26. Co-op is a win-win situation for both driver and rider. It can offer lower costs since you don't have to worry about shareholders or massive cost-fighting laws that would recognize drivers as employees, such as the $200 million spent on California's Proposition 22. The cooperative has put together a formidable and experienced business team. The founding members are former head of operations at Uber East Africa, Alyssa Orlando, former Uber and Lyft driver Martin Ken Lewis, and Eric Foreman, who brings 15 years of experience in labor organizing. The rest of the team includes Peng, who has sales experience with startup companies, David Alexis, who is a longtime community organizer in Brooklyn and Queens and an SBU alum, Mohammed Hassan, who is a board member and a longtime black car driver, and Jason Prado, who brings 10 plus years of software experience.
The company launched in 2020, so there isn't much to say about the financials. The important facts are that it is currently profitable, and even with lower demand due to the pandemic, less than 1% of the New York City market is still enough to break even. Most of the funding will go towards payroll. About a quarter will be for marketing costs, and about 15% for selling, general, and administrative expenses. If the goal of 2.5 million is reached, and we're about 1.1 million away right now, then initial steps to penetrate other markets will be taken. What separates Drivers Co-op from the competition is that local politicians are supportive. Local financial institutes have backed them. The app has launched, drivers and riders are signing up. This is working. There is no exit plan because the goal is to keep the movement going. This is a lesson learned from another rideshare company, Juno, which promised to share equity with drivers but didn't follow through when they were purchased by Get for $200 million. It was an empty promise. The community doesn't benefit if more money goes to Wall Street. We keep it local. We do it for each other.
Some key questions for Drivers Cooperative management are if they have a retention plan for customers and staff members, what are their safety measures for drivers and riders, and how will they combat competitors' ability to undermine regulations, subsidize prices, and how will they gain additional funding and repay loans. The Drivers Cooperative offers investors an investment with a minimum of $100. The return on investment is expected within 10 years, but it may be shorter. And the Drivers Cooperative has received previous funding from credit unions and donations.
The strategic rationale for this business includes a few factors. We know there is an established market as industry leaders Uber and Lyft have demonstrated a demand for this product. There is a fair return on your investment. According to Goldman Sachs, the average 10-year stock return over the past 140 years has been 9.2%. And this business is also an investment for the community, since profits earned will stay within the local economy. An investment in this opportunity does not require a massive reallocation of assets. If the average annual household income in New York City is $100,000 and the median is $70,000, this would mean an allocated savings rate between 20 to 30% results in around $14,000 to $30,000 set aside. Just 5% of that savings total can help make a huge difference in local communities. This also would not affect personal investments in stocks, bonds, or cryptocurrencies. An important note, for non-accredited investors or those making under $200,000, there are investment limits. For those making under $107,000, the limit is $2,200 or 5% of the income, and those making over $107,000, the limit is 10% of their income. Our concluding argument for the Drivers Cooperative is that a ride-sharing company that puts the drivers first will not only lead to more satisfied employees, but also more satisfied customers.
Thank you for watching this video. Please feel free to like, comment, and subscribe to this YouTube channel.